Okay, thank you very much. My name is Avraham Gluck, and I'm involved primarily in risk management, ISO 31000. I'm somewhat involved in banking regulation as editor of the LexisNexis Bank Holding Company Compliance Manual. And I would be called by detractors a Bitcoin maximalist, somebody who is convinced that Bitcoin will reach all of the promise that the Bitcoin optimists believe in. So it's interesting that 2020, which has been such a difficult year, has been a year where mainstream has begun to adopt Bitcoin in a tremendous fashion. Now, safe haven assets are defined as assets which maintain their value, appreciate, or otherwise outperform when financial markets crumble. That's what a traditional safe haven asset is. Nevertheless, even a safe haven asset is not guaranteed to produce positive returns in all market downturns. For example, the bond market or the gold market, these are traditional safe haven assets, and yet they are not guaranteed. This year, Bitcoin has emerged as an institutional grade safe haven asset with billions of dollars held, as you can see on the chart, by private and public institutional investors. And the numbers are growing daily by over $1 million of Bitcoin a day for the last 3 weeks, where a new institution shares that they have put in 1%, for example, of their reserve capital, which is about $1 million in Bitcoin. And what has happened is Bitcoin has actually become quite scarce this year because PayPal and Square Cash and one or two other organizations, it would be Grayscale, are actually buying more Bitcoin daily than are produced daily. And the diehard Bitcoiners are not selling their coins, and therefore the price is accelerating at a very rapid pace. So at this time, with Bitcoin trading at the time of this talk at $41,000 a Bitcoin, the appreciation since the first sale of a Bitcoin in 2010, which was then at a valuation of 8 cents, 2 pizza pies were purchased, as you all know, for 10,000 Bitcoin. At the price of pizza then, it was 8 cents a Bitcoin. The appreciation is actually a mind-boggling 50 million %. I checked that math. I know it doesn't sound right, but that's the difference between 8 cents and $41,000. So we do see on this chart quite a few companies that have announced, including public companies, that have announced their investment in this new asset class. And there are many others, obviously, that have not yet announced it. What are the risks, the major risks, with regard to the entire marketplace of Bitcoin? Not necessarily the person who invests in Bitcoin, but for all of us who are not invested in Bitcoin, what are the marketplace risks? So here's a very interesting example. MicroStrategy, the CEO named Michael Saylor, a number of months ago bought 470 million Bitcoin using the company's reserve capital. He followed up a few weeks later by selling $550 million worth of senior convertible notes to raise money to buy another $550 million of Bitcoin. That equals $1 billion investment of Bitcoin. If you'll note on the chart, if you go down to MicroStrategy on the chart and you look at today's value, you'll notice that that $1 billion investment has doubled. So this is a rather rash and risky investment from an individual who has fiduciary responsibility to his shareholders. I have heard many interviews by Michael Saylor that are on YouTube, and of course his board of directors approved it. His shareholders have not erupted in protest, and I think if I was a shareholder, I would not protest either. A 100% profit from $1 billion to $2 billion. But let's think about what he's doing and what this could mean to the marketplace. In effect, he's borrowing money to short the dollar, just like George Soros did to the pound in 1992. In Britain in the 90s, they were suffering from a tremendously high inflation rate. They were extremely interested in being on par with the German mark so that when they all entered into the European Union, the pound would be valued at a high rate. And they didn't know what to do about it. So they upped their interest rates to attract investors, double-digit interest rates, in fact. And that would prop up the pound. Now, Great Britain really couldn't afford to pay those high interest rates that they were promising to pay these investors. Soros smelled the carnage that was to come, and he borrowed heavily to short the pound. When the pound did subsequently collapse, he pocketed $1 billion. And it's interesting, there was a gentleman who worked for Soros at that time named Drucken, I forget the last name, Druckenmiller. Yaakov, do you know that name? Druckenmiller, who worked with Soros. And this Mr. Druckenmiller is doing the exact same thing today with Bitcoin in order to short the dollar. So we have to recognize that there's a new player in the marketplace that can really affect the entire fiscal stability of our country and of the world. So there is a tremendous market risk. So besides the market risk that the fiduciary undertakes by investing his company's entire reserve capital, imagine, into Bitcoin, and then doubling down and borrowing. Now, I will tell you that the government themselves is responsible for facilitating this because he borrowed at 75 basis points, less than 1%. Now, could you imagine borrowing at less than 1% and thereby shorting the dollar and thereby doubling your money? This is no different than what George Soros did, and it's inevitable that others will copy his move. There are many more companies that are not, of course, that are much more risk averse. They will not possibly consider allowing the CEO to take this step. Regulatory risks are substantial. Although at this time the IRS is treating Bitcoin in accordance with regular short and long-term investment capital gains taxes, with the new Democrat-controlled government, those taxes may increase substantially, and we have every reason to believe that they will. Furthermore, after the election results were settled a few days ago, the climate advocates freshly began to rail to pass legislation to ban Bitcoin, because Bitcoin consumes more energy annually over the entire world than the entire government, the entire country of Switzerland. Now, it is true that many who mine Bitcoin with electricity are using solar electricity, but nevertheless, there are many who are not. So climate advocates have a new power with this new government in the United States. The Europeans certainly are respecting the climate accords, and therefore there are regulatory risks for holders of Bitcoin. And finally, of course, hacking can never be discounted. Although the algorithm of Bitcoin is very heavily protected from hacking, from the traditional 51% hack, nevertheless, it's well known that China maintains a very large amount of mining and mining pools for Bitcoin. And hypothetically, if they wanted to destroy the entire Bitcoin, including their holdings in Bitcoin, they could do so. And of course, even though any programmer might suggest that his software is not hackable, and this software has withstood the test of time for very many years, nevertheless, obviously the risk of hacking is very substantial. And I will take questions at the end of this presentation as well.